Very good evening, everyone. My name is Billy To. I'm the Regional Retail Research at CGS International, and I will be your moderator for today's session, where we will be talking about navigating China's policy shift, what's driving the Hong Kong stock market rally recently, right? So today we have two special guests. We have Edith Chen, our Hong Kong equity strategist, and Chua Wei Ren, our market strategist. So it'll be very interesting since, we've seen quite a bit of movement, especially in the Hong Kong market, right? I mean, I think at the start of the week, we've seen a bit of pullback, and I think today we have seen some recovery on the stock market. So I guess basically the first question that everyone have in their mind is, whether the stock market in Hong Kong, the rally, is it going to be sustainable? Are we still going to see an uptrend? Or, I think there's a lot of questions on that front, right? So just before I pass the time to our speakers, I just wanted to let our audience know, if you have any questions, feel free to just put it in the Q&A box and we will take the questions. So this session will be quite different from our usual webinar, where we will be discussing on the entire Hong Kong stock market rally throughout the session. So if you have any questions, just feel free. You don't have to wait until the end of the session. We'll take in the questions along the way. All right. So maybe Edith, you can just start talking about whether what is your view on the recent Hong Kong market rally and whether you think there's still legs for the rally to continue.
Okay, thanks, Billy. So I think many of you are already familiar with the two critical policy events that jump-started the recent rally in China markets. But I think it's worthwhile taking some moments highlighting a few key aspects of these recent policy developments, which will help us understand better what will happen next. So firstly, this policy developments show that the economic pain threshold for policymakers has finally been reached, and the authorities demonstrated their willingness to put a floor on the downward spiral. And secondly, the wealth effect stemming from stocks and properties has come under the radar of policymakers. And thirdly, the readout of the Politburo meeting said the policymakers wanted to combine the promotion of consumption with the improvement of people's livelihoods, which indicated the willingness to boost household demand through direct subsidies. This would mark a major shift in China's policy playbook. Historically, China's growth stabilization efforts mostly relied on infrastructure investment and supply-side industrial policies. And also the readout of the Politburo meeting said the policymakers are committed to stabilizing the property market from declining further, which set quite a high bar, but also provided plenty of room for imagination. Lastly, the policymakers demonstrated their resolution of improving policy coordination between different ministries. So I think the question looking ahead is what should we expect next? So I think the policy pivot was kickstarted with monetary policy, but the fiscal policy lever is yet to be pulled. So based on my recent conversation with some investors, a lot of them are still skeptical whether fiscal policy will come through. And I think the answer for me is firmly yes. So that's why I believe the current rally still has legs. So the upcoming, there are several key policy windows to watch. This Saturday, the State Council will hold a press conference, and the topic is about intensifying fiscal policy efforts for counter-cyclical adjustments. And the finance minister himself will join the meeting and take questions from reporters. The next crucial policy window will be the MPC Standing Committee meeting in late October or early November. So last year, during this same meeting, the government announced 1 trillion yuan in additional government bond issuance, which also led to the expansion of last year's budget deficit ratio from 3% to 3.8%. And also in early December, the Politburo will hold another meeting to discuss the economic policy, and will be followed by the annual Central Economic Work Conference. And by then, I think we will have a rough idea at what level the next year's GDP growth target will be set. So at this moment, China's policy efforts are still ongoing, and we expect more to upcoming. Maybe Wei Ren can share more on this one.
Variant, you can share from a technical perspective, how's the Hong Kong market looking like?
Let me since I'm over on the large screen, so why don't I share over the using the my platform. So if you see from the Hang Seng Index, okay, so actually on Monday itself, well Chinese was closed for is Golden Week. We can see that Hang Seng actually has a buying frenzy all the way above to above way above 22,000 before it came down. All right, so there was a of course a classical reversal pattern. We see a buying climax all the way down, testing all the way down on Tuesday, and then yesterday it came down as well, but after lunch, went up again, and then after that by I think by 3 p.m. it gave up all the gains, but I was very confident that that the Hang Seng market is actually seeing some sort of a bullish rebound coming back. And true enough, this morning we saw the Hang Seng actually follow what the US has been doing by the US market age a new high. So the Hang Seng market follow through. So one of the key metrics often I know how the Hang Seng market will perform in recent days is you look at the Nasdaq Golden Dragon Index trading in the US market, and then you look at Pinduoduo and Alibaba, the ADR, how they are trading. So I observe that there isn't any strong selling pressure happening over the US market. So I'm quite confident that the selling temporary is kind of over. But we do not dispel the fact that there may be a three-wave corrective wave down to test 19,828 before attempting a rebound. All right, so I have prepared a slide on the larger Hong Kong market that I wish to share about the Hang Seng Index. So let me just reshare the screen over to my slides. All right, so if you can see that from the money chart that since 2008 we see the financial crisis happening. All right, and then we see that after that it goes to low at 11,000. Rebound, we enjoy a 10-year rebound up to the point that it even breaks the new high. So for Singaporean audience, this is a great fit because the SDI didn't break the new high, but instead SDI traded around this level and then before it correct out all the way. So we can see that the largest phase from 1999 all the way until now, from where after the 97 where Hong Kong was ceded back to China, you can see that we are experiencing higher lows despite there's a wild downtrend. We can see that higher lows has been forming. So it means that on the larger scale on the money chart, there's actually bullish build up of the bullish trend. All right, so if I may write something like this, so high lows and high lows and high lows, these are the things that actually go up. So you can see that break a new high, and then on my next slide, actually you can see that on the weekly chart is actually showing a very full set of a double tree corrective wave from 2018 onwards. We are past around 8 years. All right, we have complete the Y wave, especially in the near term on this start of this year, and then forming a classical double bottom, almost breaking the neckline resistance at 22,667. So once it break, all right, it will just go up higher. So the reason why there's a obvious sell down is because first, psychological pressure. People are worried that I think it's a frenzy going up. So people are exiting our position, taking profits and stuff like this. So it's a choice that they have. So it brings about this which I showed you earlier on just now, that all this. So if you look at my indicators, most of especially the long-term MACD, the moving average convergence divergence, is a momentum indicator. I smooth it out over the longer period. You can see that it has been rising. No signs of overbought. Even my midterm is not showing any overbought. So the only sign is the short term actually dwindled down, but it's still elevated above the 25 levels for the directional movement index. Means that the bullish trend is much intact going forward. So I think what happened to this weakness we're showing today is because we must know that Hong Kong is going to a long weekend tomorrow onwards. So traders don't like to have anything lingering over the weekend. So they will just exit some profit, but we do not see any major selling for now. So we are 70% to 80% safe that the rally is going to continue over the long term.
Okay. Thank you, Ryan. I think, sorry, I just want to go back to Edith. Just want to talk about the fiscal policy, right? I think, especially the announcement that's probably going to be coming on this Saturday. What sort of expectations are there in terms of, in terms of any fiscal stimulus, in terms of the timing on as well as the size of it, right?
Okay, so this is a good question. What to expect in terms of fiscal policy and also property. So, so in terms of policy, I think there are several expectations on this. So first of all, I think there will be additional sovereign bond issuance of around 2 trillion yuan. So probably 1 trillion allocated for consumption-related purposes, such as subsidy for families with second child, and also another 1 trillion for replenishing the core capital of large state-owned banks. And also, I believe there will be further debt diffusing efforts for local governments, and there will be additional bond issuance to allow them to swap outstanding hidden debt with low-cost government bonds. And also, I think going forward, local governments will be allowed to issue special bonds to purchase idle lands from developers, and this will help to improve the liquidity of the developers. So on the property policy front, I think there will be acceleration in loan approval under the whitelist mechanism, which was established earlier this year. So this will help the developers to deliver those unfinished projects to home buyers. And also, there's likely to be a better execution of the policy for local SOEs to purchase excess inventories from developers directly, and also convert into affordable housing for the low-income demographic group. Yeah, so I mentioned about the upcoming policy windows just now. So this upcoming Saturday, there will be a press conference attended by the finance minister himself, and also at the end of this month, there will be another meeting by the NPC Standing Committee. And I think the power to announce additional issuance in sovereign bond need to rely on the approval of the NPC Standing Committee. But for the finance minister, I think he might announce some front loading of next year's local government special bond quota, or maybe provide some forward guidance, like how will the sovereign bonds be allocated, especially more towards a consumption-related purpose and for households. So that's my expectation.
Okay. And sorry, just wondering, so is it better for investors to position themselves prior to the announcement, or to wait and see what's happening?
So, yeah, I think actually at this moment, I think one issue in the market is that so this Tuesday, 2 days ago, there was another press conference held by the NDRC, and the market has very high expectation before the meeting, and actually there was nothing delivered during the meeting. So we see sharp correction for the Hong Kong market afterwards. But actually, I think for a large portion of the investors I talked to, their expectations are actually to a certain extent misplaced, because NDRC actually doesn't have any authority or power to announce this fresh stimulus. So their topic are mostly focused on how to better implement previously announced policies, so which led the market to be quite disappointed. So I see there is a certain chance that probably this press conference upcoming on Saturday will again not deliver what some of the market participants are expecting. And this will again lead to some volatility. But I think we are, in terms of policy, we are on the right track. So it's just a matter of time that they will be delivered. I think there needs to be more patience on that front. And I think at this moment, another problem is a lot of people, especially those outside of China, they're not familiar with the political system and also the allocation of power between different ministers and departments. So as I said, there is a limit on what NDRC or Ministry of Finance can do. So I think probably the investors need to understand more about this before they form their expectation. So at this moment, I think the expectation is relatively a bit too high. So probably may pave the way for more volatilities ahead.
Most likely the market get ahead of themselves after the first announcement.
Yes.
And I think you're right. I mean, which is where I think you come in very important. If, for example, I also didn't know that some of these announcements require the NPC approval and stuff like that, which I think we have another questions. I think is probably relevant. In this case, what can we expect for this Saturday in terms of the sort of announcement that you're expecting? Do you have any?
So for this Saturday in particular, I think there are certain things that are within the power of Ministry of Finance. For example, they can announce, for example, front-loading some of the quota of local government special bond next year to this year. So which means acceleration in some of the projects, and also allocating more resources towards consumption related purpose, and also maybe they can introduce more bond quota for local governments to do the debt swap program, which can help reduce the invisible debt issue. So some of these things are still within their power, and also maybe they can provide more forward guidance on how fiscal policy will help to carry out the counter-cyclical adjustment in the future. So I think it will certainly be there will be certainly be more things to talk about than the one held on the Tuesday, but probably still not live up to the standard of the expectation by some investors.
So hopefully that answered TC's question. I think yes, those are some of the things that we can expect on Saturday. But I think like what Edith has said, I think the expectations are still very high, which is why I think you guys are expecting some volatility in the near term, right?
Yeah.
Yeah, and I think there are some questions whether, I mean, we talk about some property policies regarding properties and stuff. So, but instead of just asking property, I'll probably just ask it in a more broader sense, like, so it's like with this, fiscal stimulus and some of these initiatives by the government, what sort of sectors do you think will benefit from it? I mean,
So at this moment, we are more positive on internet and also consumption-related sectors. So because, for example, this year, the government launched a large-scale consumer goods trade-in program, which provides subsidies of up to 20% for home purchase, for the purchase of home appliances like air conditioners, fridges. So we are quite positive on consumer-related names, and also among the consumer sector, we also like names related to leisure and service consumption, such as tourism and catering and sportswear, and also, as I mentioned, white goods. So also we like internet sector because they are still trading at undemanding valuations. And these large companies like Alibaba and Tencent are all ramping up efforts to improve shareholder returns through a large-scale share buyback program. And some of them are also rapidly expanding into overseas markets, such as Pinduoduo and Trip.com. So I think and also for white goods, I think they will also benefit from overseas property-related demand in a global rate cut cycle, if we assume that US will experience a soft landing. Yeah. So also, I think we can also recommend some subsectors which are laggards during the past rally, such as handset suppliers, including AAC and Xiaomi, and also biotech companies like Beijing and Innovent. So I think China's biotech sector is actually a long-term growth play. So they also benefit from the global rate cut cycle because they are highly reliant on funding. So under the current global biotech landscape, this is still a field that is dominated by US and European companies. Chinese companies have achieved some progress in the past, but still has significant room to close the gap. But I think it's just a matter of time that one day these companies can compete on the global stage. And also they are one of the sectors identified by Chinese policymakers under the so-called new quality productive force. And so they enjoy favorable policy environments. And also for companies I mentioned, like Beijing and Innovent, they all have promising drugs in their pipeline that's in the trial stage. So yeah, yeah. And also we like new energy vehicle sector, especially our topic is BYD.
The topic is BYD. Okay, so I'm just wondering, what about property sectors? Is it bottom up? Is it a good time to go in? Because I think there are some.
Yeah. Okay. We see property sector was probably among the best performing since its rally, and but we don't recommend investors to chase those high beta names because these are actually distressed property developers which have already defaulted on their bonds. We think the quality private names like Longfor or the SOE names like CR Lands still are trading at attractive valuation and should benefit from the favorable policy going forward. Actually, I want to share that over the past National Day long holiday, called Golden Week holiday in China, we saw that in tier 1 cities, especially Shenzhen, there is a spike in property sales because these tier 1 cities further relaxed their home purchase restrictions before the holiday. So we see some green shoots here in terms of recovery in property demand. So if this can sustain, I think it will continue to benefit the property sector.
Yeah, I read from some news, I think that apparently people buy without even looking at the house. Is that true?
I think certainly there is, based on my on the ground, some anecdotes, I think there's more people trying to visit the some first-hand homes projects. So it's certainly a significant improvement on sequential basis, but I think it's still far from what we experienced a few years ago.
Okay, thanks, Edith. I think I'm gonna ask Viren. I think they wanted to ask your views on some of the technical front. I think you have some list of names that you wanted to share earlier as well, right?
Yes. Let me just share my slide again. Wait, let me see. Yes. Okay, so these are the names that whatever Edith shares about consumer and then the tech name, I have also as well. But I add on the SOEs. I prefer the banks and one of the insurance company I really like, not AIA, but I like Ping An. All right, Ping An. All right. So CITIC is one of the best. And then CITIC, I link it to Citibank. So will be 267 and 998 and 2318 will be on Ping An. So all these are my past transporter pick. So 267, actually I wrote it at the start of the year. So it has been consolidating, accumulating it, and then it just rally up after the policy. 998 I also have. So if I can go into the slide, okay, so 267. So I started over here on the January. So I saw the high lows. All right, and then it has been accumulating, palm up, down, and then consolidating above and beyond on all this. All right. So and then after that it broke out of the range, gap up, and then reached my fourth target price actually. So you can look at my last report was dated 30th of January. Is way even before the Lunar New Year. All right, and then it came down, and then sharp correction, but no doubt I think that it might just go down to test the previous support at 817 to $8.51 before a rebound. All right, so the one that I really like is Citibank. All right, China Citibank, very classical pattern, clear uptrend, is like what happening in DBS. I think China State Bank is the move is much more than what we have the three local banks in Singapore that have. All right, so it just consolidate, form a continuation pattern, pump up all the way, and then reach the resistance target, and then came down. Tuesday we had an internal meeting, and then we shared that it's likely to correct. If there's correction come down, true enough, 2 bars down, and then we see a very strong support closing up. So the selling wasn't that strong today. Just some minor profit taking, exiting of trades, do not want to leave the fruits hanging over the weekends. You can see that all momentum showing an upside. So we are confident that we are maintaining our long-term upside target to $6.12. All right, so I see some questions that they have. Like that I think if will be a gaming stock. All right, so I saw just now was while Edith was speaking, and then I saw a bank's good bet that was done, and then there's a casino related stock. So in Hong Kong listed there are three main one will be Galaxy Entertainment, ticker code 27. And then you got 1928 will be San China, which my top pick. I dare to say that I picked this way before Morgan Stanley actually upgrade to overweight. All right, and then you got one more will be Win Macau with 1128 .HK. You if you are really risky bet outside of Hong Kong, you can try Naga Corp. That one is they do it in Cambodia. All right, so for this I think upside is really strong. Okay, first of all, you can see that it really break out of the 1 year period of downtrend line since 31st July 2023. Came down, and then it had a bash up, and then it come down. My transporter was on this period, during this period. Okay, you can 23rd September is around here. Right, and then pump up, and then came down. I think that if any further correction, I think we'll be looking at $16.80 to $17.90 before attempting a rebound. All right, so I think that I'm upgrading my target to a recent high in July. I'll be at $30 and $34 going forward on this. All right, lastly, I think I want to share before I hand my buy back to Billy. I think while Edith was talking about property sector, other than long fall was part of my transporter pick as well. But I think that I prefer the Hong Kong names. Like one of them is like SHK, Sun Development, and maybe some Carry Properties. All right, Carry Properties, maybe some Malaysian will know it, because I think, if I'm not wrong, it's related to who is this guy? Robert Kwok. Yeah, he's 100 years old man. I think Billy will be familiar with him. All right, so this stock, I think our head of research in Hong Kong actually has a very good pick on this. Actually one of his best pick. All right, and then it rallied up. We do not see any strong sell-off, and then in fact it rebounded very strongly. Close above the 9-period conversion line of the Ichimoku conversion line. All right, and then I think that we are looking at $18.66 in the near term. All right, next one, Trip.com, my favorite. Other than attack, I think Meituan, Trip.com is the best. All right, first thing, if I have time, I'll show you if you like, I can show you the longest trend of Trip.com is a permanent bull trend on the upside. Less of this correction down. We have been on the uptrend for 2.5 years. Breakout of the uptrend very strongly, came down, and in fact rebounded, and then closed above the 9-period conversion line. I think that the sell-off was, if you can look at the 2-period sell-off, yesterday and today, on Tuesday, it actually rebounded, and then yesterday it came down, rebounded, stays above the $450 line. All right, that's very awesome. And this morning, actually, it gap up. I was actually toggling between Meituan and Trip.com whether to issue a transponder. So I picked Meituan. Meituan performed gap up, but not as good as what Trip is showing today. All right, so Trip.com definitely a long-term pick. You can use it as a long-term play for your portfolio actually. Okay, so last one. All right, before I hand up, pop up. All right. Okay, so Hotmart is actually one of the stock that's not affected by the major sell down by the Hang Seng, by the CSI 300 on this. All right, I think Hotmart Y is I have this different title, Labubu. Yeah, you know this craze that uh I believe was it Blackpink or something that Labubu craze was about, and then it didn't really and Hotmart is actually the exclusive distributor for Labubu. All right, so per month uptrend. I've been editing stock since start of this year. All right, and then it went up. This today some sell off, but I don't think it's amounting to any major. So if major come down, I think $48 will hold and then rebound to the upside. So I'm holding this for very long. I think it's $68 is actually possible in this. All right. Okay. All right. So I will just pass my time back to Billy. Billy, to you.
Thanks, Ren. Yeah. I think if you buy Labubu, the prices also will go up, right? In the second hand.
Yes, correct. Yeah.
Anyway, I think there are some questions. I think Edith, you wanted to answer, so I saw it's regarding the valuation in the market. Yeah.
Yeah, so I'm sharing the screen on this for Hang Seng Index. It's actually forward P trading at 9.3 times at the moment, and it's still below its 5-year historical median. So this is in terms of vertical comparison. So horizontally, we see that if we look at the MSCI China Index, it's trading at around 12 times PE. But if we strip off China from the emerging markets, it's trading at around 14 times. So there is still a visible gap in between. So I think it's still so there's still room for narrowing this gap, and before the Hong Kong and China market, the valuation become quite stretched. So our target is for this at the end of this year for valuation to reach our index target is 11 times, which is 5% above historical median, 5-year historical median. So that will translate into an index target of 24,500 points. So for next year, I haven't really come up with an index target yet. But I think I need to, so first of all, I need to wait for this fiscal policy announcements to come through. And also we need to see more concrete evidence that policy execution is up to expectation, and also probably that we see the policy come through to the economic indicators early next year before we maybe adjust our valuation target and also earnings projection.
Okay. And I think that's another question. I think the two of you have been quite positive about the Hong Kong market. Just wondering, have you been noticing in your conversations with some clients, are there any foreign funds that are taking short positions that are on the Hong Kong market?
So actually, so over the past few years, I think the global funds has been reducing their position on China market, and the underweight position is actually, I think, the largest over the past 10 years. So I think overall speaking, global funds are already extremely underweight on China markets. So for this rebound, I think more global funds are trying to move towards a more neutral position instead of underweight.
Okay, thanks for that. All right, I just wanted to ask in terms of the geopolitical risk. I think we've heard a lot about US, China. I mean, we've been this. I mean, every day if you look at the news, you hear that, especially with the US election coming, right? So it becomes a even more high risk. Is that something that is in your mind?
Yeah, actually, it's just less than 1 month before the election, US presidential election. So I think this is probably the biggest downside risk for the China market, especially if we see Trump win the election, because I think during his campaign, he has been threatening to impose 60% tariff on all Chinese imports, and also introduce a universal baseline tariff of 10% on imports from other countries as well. And also he threatened to introduce other restrictions on China in terms of investments, and also both inbound and outbound. So this probably introduce a real threat to the corporate sector, because it's just not just a risk to the trade, because corporates will be delaying their capex decision until they see the uncertainty or everything is settled. So this you need to also consider about the secondary impact as well. But if the Kamala Harris win the election, I think in our base case scenario, her foreign policy approach will be most likely be similar to that of Biden, because actually her tenure at national level is quite short. So we don't have much track record, and also in terms of his foreign policy. He has kept a relatively low profile in this front, and also consistently supported Biden's foreign policy as vice president. So my expectation is for foreign policy to be broadly in line with Biden and other mainstream Democrats. And also, I think she has ruled out Trump-type tariff as well, because during the debate, I think she referred to Trump's plan to impose tariff as a national sales tax. And she said it will cost U.S. households to a lot more in terms of daily expenditures, and so I think we won't see her imposing a tariff after if she get elected. But I think she will still carry on Biden's so-called de-risk efforts by putting more restrictions on outbound investments, especially on sensitive technologies.
Okay. Thanks, Edith. I think we have another question, which is regarding the Golden Week. I mean, some of the numbers that have come out, I think latest consumption numbers might be probably weaker than previous numbers. If that's the case, is that a reason for investors to be concerned, or should we focus on, right?
Actually, based on my understanding, so per capita spending should be up year on year, and better than the previous Labor Day holiday. So I think the numbers are broadly in line with our expectation as a consumer analyst or economist as well. So it's the growth rate is around single digit, and we see that actually people are more willing to travel longer distance, because air flights turnover is up like 8 to 9% year on year, and also in terms of outbound travel, it has still delivers strong growth. So that's why we are positive on Meituan. Yeah.
Edith, I think, and Wei-Ren, I think the two of you have shared a probably rather similar view. I mean, in the near term, we should see some volatility, and of course, the longer term, we should see some recovery and of course, positive trajectory for the Hong Kong market. So I think there's a question. Should we take a short-term view, exit now, take the profit, or is it a good time for us to buy in and hold for longer term?
I think every correction at this moment provides us or anybody who are still on the sideline to maybe take a position on the stocks, quality names especially. So actually the market has already been up for quite a bit, like around 20 to 30%. So I can't say that the upside is not exhausted, But going forward, I recommend investors to be more selective on sectors and each individual names rather than jumping to the every name. Yeah, so we talk about our preferred sectors already. Yeah.
Really? Your take?
Yes, so I share the same thing. I think every time, I mean, market don't go in a straight line on this. So, you can see that I always screen stocks based on volume. That's one thing. And then another thing is I like quality names like insurance, like the larger market caps with strong fundamentals stocks. So I don't really go on to stocks like okay, in Hong Kong there's a famous a famous scam is called the WeChat scam. So they ask you to buy a certain penny stock, bump up and then down. So that is a no-no, right? So, but for me is, I mean, given any markets, always focus on quality stocks, good fundamentals, and stuff like this. So, understand that the market will always go in the correction. So right now, all right, the market actually that we are in a period of like, oh, okay, profit taking correction, and then but that doesn't mean that it's a crash. All right, we don't see a crash. All right, if you can see the Hang Seng market actually, if you consider it a crash, so be it, but I don't think it's a crash because given the fact that from the start on 11 September all the way we have grown certain percent, like maybe 36 close to 36%, okay, but we actually from the top to the bottom we are actually only negative 13%, so it's not even half of it. All right, so it's just maybe three quarter of 1/4 of it, and then so just look out for any opportunity, buy on pullback, strong fundamentals, and then hold it for a long time. That's the strategy I have.
Okay. I think there is specific questions on education stocks. Do you have any comments on that?
Okay, I'll take it because I have a education stock, it's called New Oriental, but I don't, that one more 9901. So yes, the New Oriental. This was my transporter pick at a time over here. So it went up and then it came down. Strong breakout, and then after that it still sustained over $55.60. Breakout of this flag, this larger flag from 4th of March until now. So we do see a potential upside. If you look at the longer term chart, ever since it bottomed out in May 2022, so it has actually embarking on the uptrend line on this. So I think that early uptrend, I think still got much more room. I think it can go to $100 over the very longer term period, maybe take 2 to 3 years to materialize. So be patient about it for the education stocks.
Okay, thanks, Ray. I think the two of you mentioned about the consumer stocks. I just wanted to ask because the youth unemployment rate in China is a bit on the high side, right? Edith, if I'm, correct me if I'm wrong, right? Is that a concern? Like, and where will that growth coming from? I mean, for the consumers sector, I mean.
Yeah, I mean, so this, as I mentioned, this time around, there will be a shift in the policy playbook. So going forward, so historically, China's growth stabilization efforts has been mostly focused on infrastructure projects carried out by local governments, and also supply side industrial policies, which encourage certain sectors and in order to create more job opportunities. But I think over years of development, this room have been exhausted and also contributed to the mismatch between supply and demand. So going forward, we expect the policy to shift more towards demand side. And also we expect sovereign bonds to be directed towards direct subsidies to households in the form like subsidy for second child and low income demographic group. So that will help provide a floor to the income expectation in the labor market, and also improve confidence in for the households.
Okay. And earlier you mentioned about Alibaba. I think there is a question on Alibaba. Do you have a technical that you can share on Alibaba?
Yeah, sure. Okay, let me share my screen. Am I sharing? I think I'm sharing.
You are sharing.
Yeah, sorry. Sometime. Okay, so Alibaba, I think I'm not a fan of Alibaba. Not because I don't like Jack Ma or something. Or I'm against Ant Financial. But Alibaba has consolidated for a very long time and break out. Unlike Meituan, I really love Meituan. Based on the technical setup that it presents. So for Alibaba, you can see that it actually shows the same setup like everybody, like a sell down and then a rebound and then do they gap higher? All right, but Alibaba, I would say, monitor for a while. I would say that I prefer to wait out this support level around $94.30 before taking on this chance. All right. Yeah. All right. And then I think I saw Pink Duo. So if Billy if you don't mind, I really love this stock. Pink Duo. Okay, so Pinduoduo gap down on the supply side. All right, Pinduoduo is one of the stock. Okay, this for me. All right, like to watch Pinduoduo, how it reacts. And then I can roughly gauge what will happen in the Hong Kong market. Other indicators will be a Nasdaq Golden Dragon Index in the US as well. All right, so for Pinduoduo, you can see that it tested the $150 resistance line for quite a period of time. All right, test, break, test, and then it came down. All right, so if you look at that, I think it came down. So this is why the reason why I think that the Hong Kong, the Hang Seng Index, the Hang Seng Tech Index, the Hang Seng Consumer Index, all these are still holding out well despite a very strong sell. Because I think Pinduoduo didn't really experience a very strong sell off. All right. In fact, I think on the day on Tuesday, all right, it kept gap down and then came up again. Yesterday, lower but still struggling to buy back. So I think that pre-market you can see that it's $142.60. So likely over the long term, likely to break the 155 and then maybe go to $170 in the near term. All right.
Okay, thank you,
Yeah,
Ian.
pass back to you.
If I saw you wanted to take a question on the index.
Oh, yeah. So I think there is a question about Shanghai Composite Index going to 5,000. I think it's standing at 3,300 at the moment. So that would be a very bullish view if we, so actually, so at this moment, from my observations, Asia market is actually not as strong as I previously expected before the market reopened this Tuesday. So actually at the beginning, I was quite worried because during the long holiday, I noticed that the enthusiasm from retail investors in China is actually quite above expectations. So it seems that a new generation of retail investors are coming to the market, and probably they are very young in their 20s or even early 30s who have not experienced the 2015 stock market bull run and subsequent crash. So there is news about brokers opening during the holiday to facilitate new account opening. So so I'm quite worried at first because if there is a quick rally in China, it will risk the repeat of the 2015 market episode. But if I think if a market bubble become burst, it will be far more worse than if we are just in a bear market, because that will be a threat to the financial stability, and also means the policymakers need to spend a lot of efforts to manage afterwards. So I think the policymakers should have a clear incentive to manage the pace of rally of the stock market rally. And I was quite glad that regulators are already starting to show some efforts on this front. For example, the banks were told not to extend consumer loans to individual investors for them to invest in the stock market. And also, there are some low-profile officials, even quite low-profile figures coming out to write some articles to talk about the two new tools created by the PBOC and remind retail investors about the risk in the stock market. So I don't see so I think the risk of a quick rally has reduced at this moment. So yeah, because if it's a quick rally, I'll be quite worried.
Okay, thank you, Edith. Wei Ren, you want to talk about the link feed and CK infrastructure? You are on mute, sorry.
All right, so for link rate, I think you can see that I did have a report on back on 2nd August. So I think $45 is my target price. I think we're still far from we almost reaching 45 this year. I think if we look at a larger scale, pardon the messiness, is starting to show some of positive rebound. If you can look at how is it forming, like it has been battling down since 2019 all the way, and then we found some strong support at this level of it. All right. So if you look at this, this is actually a kind of like a corrective wave. A, B, and C. So from the weekly chart. So if we look at how's the daily chart in the near term, you can see that this expectation of $40.40 sell down is kind of expected because it's near to the resistance level here, this zone. Actually I thought that you go to 42, but no. But you can see that it's much more of like a corrective sell down. I believe that there will be one more upside to test around 39.75 and then goes up. So it's link rate will be a very large almost a long-term play. So I think that the next level to test will be at $36 and 35.35. So if you look at the extension level of the stock, right, you can see that if it goes up higher, or maybe we take a 1-to-1, is actually near the 1.32 and the 1.618% level of this leg down. All right, so this is a very good level to actually watch out for any correction if you want to add on. So if you are in position since the start in August, then I think that is a good stock to hold on to it, and then just ride out. I think link rate will be is I think part of the Hong Kong office, I think they are link rate is, I think we'll choose I think favorite pick as well. All right. And then there's one more is the what you call, let me look at the CK infrastructure. If I'm wrong, is 1038. Okay, so CK infrastructure, you can see that start to turn, all right, bearish. But I think that I think if you look at the weekly chart, I think it's still on the upside, just very parabolic, and then correction is still manageable. I think despite Ichimoku showing bearish sell down MACD, I would say that look out for another next support at $47.55 and $46.10 for a larger degree correction down to the downside. So for this CK, keep it in a watch list, but don't enter at the moment because it's showing clear reversal signal already, especially long-term MACD. Stochastic is overbought. Classic price action, you can see that this is actually a routing top as well. All right. Sorry, it's been laggy. This is a rounding top. So every time I see this at the top, with all the signal coming, the indicators showing this, I will start to stay out for now. All right.
Thank you, Wei Ren. Edith, I just want to ask you this. I think if we've talked about some specific stocks and all that, maybe for investors who are not too don't have the time to look into specific stocks, what are the ETFs that you could recommend in terms of for consumer or even like tech, for example? So that
Yeah, actually, I think the most liquid ETF in Hong Kong should be the Hang Seng Tech ETF, so, HSTCH ETF. So I think it covers all the large internet names like Alibaba, Tencent, Meituan, Trip.com, Baidu, and NetEase.
Okay, what about for consumer?
Consumer, I don't think there is one actually. So even if there is, I think the liquidity would be quite poor.
Okay, hope that answered the question. I think Wei Ren, you wanted to show the technical, right?
Yeah, someone asked about HKBN, so I posted my report on it. But HKBN, ever since it has trending up, I think still on the long term, I think shorter term, I think still on the early uptrend, higher high and higher low. So I think the next target will be looking at 342 in the near term. I know someone wrote about the dividend being at wait, let me see the live question. All right, dividends are 10%. So yep, I think that will be from the technical point of view, it's a good stock to actually look for to add on. But I think if you want to enter here, should be my guess. So be it. But I think that I was like looking smaller position and then wait for another position around here to buy on the rebound.
Okay, thank you, Ren. I know we still have some questions around, but I think we're running out of time soon. So I'm just gonna ask the last question to Edith. Edith just want to know, I mean, you guys have been quite positive on the market, but what are some of the key risks that investors should be looking for? I mean, there will be quite a few announcements that will be coming out from the Chinese government, right? So what sort of things that investors should pay attention, or whether any economic data that they should look at for things to probably turn south?
So in terms of economic indicators, upcoming there will be the economic data for September, but I think markets would probably look through these numbers because this was related to last month and before those policy pivot took place. So I don't think that will that will become a major concern. And in terms of major downside risk, I think firstly, as we mentioned just now, it would be the U.S. presidential election. And secondly, and I also talk about it, would be if the retail-led liquidity-driven rally in Asia market become out of control. So that would be, so I think if that's the case, regulator would probably step up their guidance on the market.
Okay. Is there any others? That's two, right?
Yeah.
Okay. Varen, I think you can still have time to share on the technical for iShare. Let's say. Are you going to do that?
The last one, I think I share E50, I think inside bar, but I would like to, you can, all right, because it's just if you take the Fibonacci, this is a classic way of the is around 51.50% of the whole swing low to swing high nearing 61.8, but inside bar today, all right, but you can take a chance, all right, but just say that if you are risk averse, just wait for a moment. All right, but you are in, why not? All right. Yeah.
Okay, thank you, Varen. I think there are still a lot of questions that you guys probably wanted to ask. Feel free to just send in your questions to us. We'll try to answer them, via email or whichever channel that our sales representative can reach out to you guys. Thank you for joining us. And if you need any slides or I think Varen have been sharing quite a few reports on the chat site as well. So feel free to just go in and take a look on some of our analyst view. Thank you, everyone. Thank you, Edith. Thank you, Varen. Good night.
Thank you. Good night, everyone.